Hi guys, today I want to share with you guys on a strategy that I have successfully used to earn over 90% in my first SPY position in just over 4 months. As you can see, these are my 5 current positions in SPY and my average gain is 41.82%, while my highest winning is 91.41% and my latest position is up 14.66%. Do note that these are all unrealized gains, so stick around if you want to know more about my SPY LEAPS options game plan. So this is the exact timestamp of my 91% winner. Okay, as you can see, I entered the position on the 24th of July 2021, and this snapshot was taken on the 6th of November 2021. The trade that I'm in is the SPY LEAP call option, which expires on the 15th of December 2023, and it has a strike of 450, and this trade was actually traded at 41.56 at that time. So before I begin, okay, the usual disclaimer, these are not financial advice and everything is just for entertainment purpose. I'm just that dude who has read a bunch of books and googled the rest of my information, and just like most of you guys here, I'm also learning along the way. So this is the content that I'll be covering today, and my strategy will consist of mainly LEAP options. So hence, I'll be explaining what LEAPs are, the main advantages of buying a LEAP, the reasons for buying a LEAP on SPY, the strategy that I will be implementing, how I intend to profit take, and lastly, my portfolio results as of the 7th of November. So before we begin, we must first understand what the LEAP is. So LEAPs basically just mean Long-term Equity Anticipation Securities. Okay, and to keep it simple, a LEAP is basically an option with a minimum 1 year till it expires. A LEAP option can be either a call option or a put option, but for my strategy, I'm mainly focusing on LEAP call options. So what is the main advantage of purchasing a LEAP call option? The main advantage are it provides leverage by allowing the option buyer to control 100 shares without needing to fork out as much capital as compared to buying 100 SPY shares. You know how often do you hear people mentioning that options are very risky? Actually, this is very true if you are buying short-dated options. Short-dated options are basically options with very short expiration date, extremely popular right now because firstly, they are cheaper as compared to a longer dated one, such as a LEAP, and secondly, if you guess the direction right, you can earn extremely large profits fast. But the thing that you need to know is, if you guess the direction wrongly, or if the trade needs just a little bit more time to be right, then due to time decay, you'll notice that these options lose their value very fast as well. Hence, what I feel is a LEAP just gives you enough time to be right. So now let's talk about buying a LEAP as compared to buying shares direct. Okay, so let's assume we were to buy 100 SPY shares and it is trading at 468, for example. So 100 shares will cost us $46,800. So therefore, if this ETF were to go up $1, it will result in a 0.21% profit. So now let's assume we were to purchase an SPY call with 803 days till expiration at a strike of 480. If we were to look at the option chain on the left, you will see that the asking price for SPY, okay, with a strike of 480 would be $48. Okay, and as one contract controls 100 shares, therefore this would mean $4,800 per position. And if you look at the right part, okay, you will see that the delta of the 480 call strike is at 0.49. This would mean that if this ETF were to go up $1, our position should theoretically go up $49, returning us 1% of returns. Okay, this is basically 4.7 times more than what we will get by holding 100 SPY shares. So, I'm sure you may be wondering, so Darren, why must it be SPY? Why not something else? Actually, I've done my own due diligence and research, and I just feel that based on past performance, if you can see, yes, noted there has been corrections on the SPY, but the SPY has been slowly and steadily trending upwards. So will this trend continue? Actually, no one will know. However, I am of the mindset that the stock market tends to have a mild bullish biasness, at least over the long term. Okay, and it's due to this bullish biasness that has resulted in me buying SPY leap calls. So I'm sure you guys may be wondering, so what is the strategy? It's a very simple one. I aim to dollar cost into SPY leaps in stages. And the reason is because with SPY being at all-time high, I'm also concerned of a pullback. And hence, I would not want to enter into so many positions so fast, as I am sure that I myself will not be mentally able to accept a huge loss if that were to happen. Hence, what I tend to do is to enter a position, wait for that position to profit, then put a stop loss at break even. Okay, and then after that, I'll enter another position. So this will allow my previous position to be risk-free in that sense. And the leaps that I would purchase for this strategy are those that are 1 to 2 strikes out of the money, as these leaps tend to be more affordable. And lastly, I will buy leap calls that are furthest to expiration. As of now, this would be the call options that are expiring on the 19th of January 2024. This is because with the market being so volatile nowadays, I'm more than willing to pay more for the assurance that I have ample time to be in the direction. So of course, with all strategies, there has to be that profit-taking strategy. So for me, once my positions are profitable, I will place a stop loss at break even. This will effectively make my trade risk-free. I will then adjust my stop loss as the trade becomes more profitable. However, since my positions were opened fairly recently, hence I would not want to make my stop loss too tight, as I am long-term bullish on SPY. I will only tighten my stop loss when I receive a sell signal from my technical screener, which is MarketClub. Okay, and I have been using this screener for around a year, and I'm super comfortable using it. So once MarketClub issues a sell signal, that will be my cue to tighten my stops. And if I were to be stopped out of my position, I'll then wait for MarketClub to issue a new entry point for me to enter. And my last profit-taking strategy will be 1 month before expiration. This is where my calls will then start to experience a very steep time decay. And if I were to ever hold my position until then I just won't be greedy and just realize my gains and sell my position at market. So for those of you who just want to have a glimpse of how MarketClub works, okay, basically, in a nutshell, we enter a trade when the monthly triangle is green, as you can see. Okay, let's just draw a circle here. Okay, so when the monthly triangle is green, we will enter, and we will exit the position when we see a red monthly triangle. However, for myself, I would prefer tightening my stops should that were to happen. So for those of you who have stayed to the end, hey, thank you so much. This is my first video. I really thank you for the support. So let's have a glimpse of how my portfolio has done. So as you can see, this is the 6th of November and my positions are thankfully all in the money. I have taken the time to ensure that each position has a stop loss just in case of a correction, and you can see it's over here. These are all my stop loss. Okay, and what I aim to do is create a monthly journal of my SPY trades just to keep myself accountable. And if this is something that you guys feel might benefit you, please like and subscribe to this video. Okay, so that's the end of my presentation. Please like and subscribe for more updates on my strategies to grow my wealth, and also comment below if you have any questions as to how to implement this strategy. So let's get rich together.